Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Chahine.
This is a volatile puppy here, isn't it?
And Dennis Thick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Tuesday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Chahine, and Dennis Thick. Wow, do we have some news to discuss? I think Dennis would buy GE today for a penny. We'll have to ask him in a minute, though. We also have some GWPH news yesterday. They jumped the gun on that. We're going to have Alan Brochstein digest that for us and break it down. He'll be on at 8:15, and Nick Chahine will join the show at 8:35. Joel, how are we doing this morning in the S&P futures?
We tried to rally last night, Spencer. Your pre-market highs 27, 28.50. I happen to say if we could clear that, even 27.30, the bulls are still alive here. As long as that pre-market low, pre-market high holds, look for us to drift here, try and find some buyers just under 27.20. Crude in the green here by 20 cents at 68.28. Got awful close to that $70 level, now backing off a little bit. Gold down $11. We're going to talk about that with Dennis just here in 1 minute. Silver got near 17, now buried down on 16 cents, down 14 at 16.18. And you talk about a chart sitting on a cliff. How about these Bitcoin futures trying to get away from 6,000, but not doing a very good job? Dennis, how you doing on this Tuesday morning?
Wound up. I'm already wound up. It's 8 o'clock in the morning.
So does that mean Spencer and I have the rest of the day off?
Probably, because I'm going to be on my tangents all show. No, we got a couple guys here. I'll try to take it easy, try to overtop everybody. I always do. So start us off. I'll give you the lead. Where do you want to go?
You got to go to your favorite stock, GE.
Wow. So news, Spencer, GE. We got a big lift here this morning.
They're going to reduce their debt by about $25 billion, which is great, I guess. But they're selling off half of their revenue from last year. They're spinning off their healthcare business, and they're spinning off their stake in Baker Hughes GE. They're 2/3 stake in that company. So they're selling off their oil and gas and their healthcare business. I'm not right today, obviously. It's going to take a few years, but that's the news on GE. Dennis was all talking about their dividend. I think they've said the dividend is safe for now, at least until they finish selling off their healthcare business, which will take about a year.
Saying maybe for the next year, and then they're going to reevaluate the dividend policy after that. I mean, they're doing the same thing that Valiant did back in the day, which I guess is what you have to do. I mean, VRX came up a long ways after they started divesting some of their better assets, just selling off, trying to get out of debt. I mean, they've got a ton of debt, a ton of assets that aren't producing as much as they should for the debt that they've taken on. So they're looking at getting out of some of this stuff. So I guess that's the right move. The problem is, like you said, Spencer, is that they're giving up a hell of a lot of revenue here too.
Half their
revenue generating. And so the revenues are going to be dropping too. So then the question is going forward, you get out of some debt, but now you're going to get less revenue. Now your multiple goes up because you're going to have less earnings per share. Now your dividend is potentially not safe because it won't be covered because you're going to have less revenue. So you're kind of just, it's hard to evaluate here. A lot of moving parts. So I don't know. You see the rally here this morning. I tend to think every rally in GE is a selling opportunity, but the only reason I'd be somewhat nervous to do that is because I saw what happened to Valiant afterwards, and VRX really obviously took off. Now, completely different businesses, but similar problems. Too much debt, need to cut out some stuff to get the debt down. I think it's the right move. I think the market is applauding it at least early here, but when the dust settles and you have less revenue, when the dust settles and you can't maybe afford to pay your dividend, you have to slash it or maybe get rid of it. I mean, is that really good for the company?
I mean, it's just like with all these moving parts. I mean, how do you evaluate this company? What's going to be left? What's going to be left farther on down the line? I mean, we talked about this on the pre-market show. I don't know what the true disclosure is going to be on the net result of that Baker Hughes deal. I mean, that was a bad deal, but Well, you know what we care about? We care about the price action here, and GE is up 6% at 13.52. Your pre-market high is right here too at 13.57. We just made that. Nothing great there on the dailies. I guess I just use 13.50. If this thing opens up and trades 13.50 by the end of the first bracket, for me a bracket's 15 minutes, then I would say, hey, this thing's got a chance to hold on. But if this opens up at like 13.60 and the next, all of a sudden it's at 13.45, I don't see how you could hold this for a long, at least on a short-term trade.
One thing is it has held that support, back from March and April. I know we breached it briefly the one day getting down to 1261, but we got right back over it again. There has just been multiple buyers here in the 1270 area, I feel like forever, even yesterday. So support is still support. And yes, we broke it by 10 cents, but really it got right back up over it. So you can have an argument from a technical perspective that this is trying to put in a hard bottom at 1275. Now you're only 75 cents away from it. You could have some buyers as it pulls back in. This is a big day for it, though, like you were saying, Joel. It needs to hold on to these gains. It needs to be applauded. It needs to stay at least above 13. I think I'm never chasing GE, but I think if you were to pull back here, I do think you find buyers in the lower 13s and that whole 1275 area where you found them before. So you kind of know where your support is. And, they could run. I mean, the thing is in the doghouse, there is some people short this thing. There is some people that believe it's going to single digits, which I am one of them. I think when the dust settles, I think we do see this thing a couple years from now in the single digits, maybe even a year from now in the single digits. A lot of issues here. I'm not putting my investment money in it. I will trade it, though.
Yeah, always a trade. I know it's one of your favorite stocks. I mean, also, and I've talked about this before on the show. I mean, you had 5 days in a row where you made a low under 13. And I don't know if those are like long-term buyers or shorts covering in, but, maybe they're just looking for a half a point or a quarter of a point on a big position. Now they get the good news and they're just going to be dumping it here. So I think. I mean, there could be some follow through. A close over 14, and I'd be like, okay, all right, I'm going to lean on that 1270 low. But very important day for GE, and we'll see how it reacts.
It's what they had to do. So
yes,
it's bottom line, they need to get out of some debt. It's just too much there, too many old businesses. Divesting these things is the best thing they can do. It's the only way out. So they're doing what they have to do. So that's good news. So I agree with the move, and the market does as well.
There are no details as far as how they're going to unwind the Baker Hughes investment. As far as the healthcare investment, they did say they're going to sell 20% of that and then distribute the rest back to shareholders. So I guess that would be a special div of some kind. I'm not really sure, but no details on how exactly they plan on getting out of this Baker Hughes stake that they have.
Shareholders like spinoffs, and so I there's a lot of reasons for this to go up today. So this is not one of those moves I would say is unjustified. It's just a matter of whether the move can hold because the sentiment to GE is still so bad. And obviously there's still so much uncertainty here. But I just don't wonder if there's a lot of institutional money managers, like Joel was saying, that says, I'm getting half my losses back, or maybe money if I was buying it here, and I'm going to use this opportunity to lighten up, because it seems like whenever they have some good news, they follow it up with bad news a week later. So everybody's been burned on this so many times. I was burned as well. Had my investment portfolio for the better part of 15 years. Basically made nothing on it, and probably lost overall. The only reason I probably made money overall on it was because I got the dividend for so many years. But I'll tell you, this is just a terrible investment, and it's been a terrible investment. I don't see that really changing long term.
On this news, yeah, Dennis, we got a question in the chat, but this could almost be a whole show from Texas Linda. So maybe we'll do. The question is, does one analyst company upgrade mean more than another?
Yes.
Never heard. Yes.
That could be a whole show. That could be a whole show.
Keep that short. Yes.
Yeah. Well,
I rank them too. I mean, you've got your top tier firms like your Goldmans, your Morgans, your Citigroups, your Bank Americas. They're very influential, especially on U.S. stocks. Then you've got your mid-tier firms. You can probably go on the U.S. side. If you're overseas, your top tier firms are always Deutsche Bank. So it depends where you're domiciled too. I mean, if you've got a European stock, getting downgraded by Deutsche Bank, that means more than a Goldman Sachs downgrade. So it kind of matters if the stock that's getting upgraded or downgraded as well. But other things being equal, if it's a U.S. stock, think about your big U.S. brokers, and you can look to your mid ones, and then you've got your smaller shops, like wow, there's just a ton of them there.
Imperial
off too. But yeah, they're getting really small. So Goldman's going to move something more than probably anything. But it depends. Sometimes some influential ones too. I'll tell you, Stifel's very influential as well.
I would say that your second tier is like your Stifel, your Evercore, your Nomura, your Credit Suisse, or maybe you mentioned them already, or your Jeffries. That's like your like second tier, wouldn't you say?
Yeah. And then if you go down on the third one, who would you put? Like, just list a few off that are doing updates today.
Everybody else, maybe, I don't know, Benchmark, SunTrust. I'm not really sure about them.
We know,
and it kind of depends on the analyst too, right? Like it depends.
It does.
Like John,
That's a good point.
Like John at GE, the guy from Deutsche Bank who downgraded GE last summer, he's been all over the story. So you have to follow him.
It's got more influence than anyone.
Right. You have to follow. Trying to understand, try to remember, follow which analyst has made good calls on what stocks. That's why we like Gordon on solar. That's why we like, John G. Inch on GE. That's why we like a few other guys. That's why we like Gene on Apple. You have to just kind of remember who's been on the ball, really.
Yeah,
Right.
the firms definitely have their own weighted category, and firms could be more influential in one sector than another. And then just on top of that, another thing we talk about, it's like there's not one analyst doing something. It's like 2 analysts, 3 analysts. Get the ball rolling. Like, look what they did to Netflix. I mean, they walked this thing up. If you were short, you got your face absolutely ripped off with all these $500 price targets. And in the middle of that, it makes a high at 423.21 and sells off. So, but we could talk about more of that in a little bit.
I'd like to see, this is a good conversation though. I'd like to see somebody write a paper, and here is, a thesis for a master's here, or a PhD thesis right now. Try to take out, the moves typically a stock might move up 2% on an upgrade, let's say. It'd be interesting to see if you backed out all of that movement from the upgrades and downgrades, what the stock movement really looks like. I would gather that a lot of your moves are based on analyst ratings, like a lot of it, because the stock might meander for a while, then it gets an upgrade, and then it starts going, and then it gets another upgrade, and then it goes more. It'd be interesting to see, like, is it 50% of your overall move in a given stock is just due to analyst movement? I bet you it's higher than you think. Like, obviously earnings are going to be your number one driver, but besides fundamental news coming from the company, it's analyst ratings that really drive it. And there's people that follow this stuff, and there's people that will buy it. I mean, I do too. We know what a certain analyst is worth. The algorithms all follow it as well. So it would be interesting to just see, how much movement overall, like the Netflix move from 300 to 400, how much of that was really because of people raising their price targets and, people just upping it, and not fundamental news from the company. I bet you over half that move.
Oh, it's definitely comes in instances. But,
it's tough. I was just going to say it's tough. Dennis is right. They are a major catalyst, but you also have to be able to recognize a crappy rating when you see one, right? Like
it's an opinion. It's just an opinion.
Right.
Is all it is. Like, the market probably puts too much weighting into ratings overall, because they drive price. I mean, every time you see something, like, let's look, for example, today, maybe we're going to do a rating show here, but
we have Alan.
You've got the market kind of trading flat. Intel catches the downgrades, down 1.6%. You got Square catching a downgrade, it's down 1.1% here this morning. You got Micron catching an upgrade, it's up 2% here this morning. Those are just moves just because of the analyst move. So you can say right there, you can just back it out and say, okay, this Micron 2% move is a pure analyst opinion. It's just an opinion. That person could be wrong, could be dead wrong. Their opinion is maybe a little more informed than our opinion or my opinion. But I mean, it's still just an opinion. So it's kind of silly almost that the market puts so much weighting into ratings, but it does. And you can't argue with it. I just wonder in the long run if, a lot of these moves, sometimes, the ratings give you a really good opportunity for fades too.
Before we go to Alan here, the institutions, though, and the hedge funds, the big players are using this information too. So,
For sure.
yeah, so there's a lot of very great question, Linda. That might be the question of the month so far. But Spencer, we got a guest here at 8:15.
Yeah, I'm going to take a quick break, and we'll grab Alan off the air. We'll bring him back. Alan Brochstein, the author of 420 Investor, will be right back in a moment. All right, welcome back, everyone. PreMarket Prep, Spencer Israel, Joel Elkanah, and Dennis Dick, now joined by Alan Brochstein, the 420 investor. Alan, big news yesterday. GWPH Epidiolex has finally got its FDA approval. I feel like we've been talking about this story for like 4 years. Tell us about it. Had the stock had a very interesting day. So first, I guess, just tell us what the ruling means in the bigger picture.
Yeah, so a lot of people don't appreciate this, but this is the first cannabis-derived drug to be approved. There's been synthetic drugs approved, but this is very different. It comes directly from the cannabis plant. And I know it does feel like a long time that we've been following the story, but actually that was pretty fast. I'm very impressed with, even with the slight delay, how quickly they were able to get this done. And what it means for GW and what it means for other companies remains to be seen. But I think this is actually one of the most important things that's ever happened for the cannabis industry. And the reason I say that is our federal government says that cannabis has no health benefits and it's dangerous. So it's Schedule 1. And now we have a drug that's been approved by the FDA. We'll see within 90 days what the scheduling will be. But obviously, it's going to not be Schedule 1. And I think the federal government has a logic issue here, because how can you say that cannabis has no health benefits yet that a federal agency has approved it, a derivative of it?
That's a really good point. I don't know. So I guess what would have to happen? I guess the government would have to go back and reclassify the drug. And
I don't know if they have to, but if you look to the north, there was a lawsuit. There's been a series of lawsuits, but there was a lawsuit years ago that opened, that basically that it was a human rights issue, and it wasn't right for the government to deprive people of access to something that could treat their health, and went through the Canadian court system, and now we have on October 17th it goes legal, but it's now technically it's passed. It's legal in Canada, so. I think, we'll see how it plays out, but the implications could be that, ultimately you get a rescheduling or descheduling of cannabis ultimately, and maybe get legalization down the road here as well. We'll see.
Okay, so GWPH, I thought that the news was expected tomorrow. I guess they jumped the gun yesterday, middle of the day. I don't know how common that is.
Yeah, I don't know exactly how common it is, but it definitely happens. And there was a comment made at the FDA advisory committee about that it might come a little bit sooner. It was at the very end of the proceedings. And I mean, think about it. There's people that are suffering. The quicker they can get this approved, the better it is, right? So the PDUFA date is a last date. It's not the date.
Right.
And,
right.
That's what happened there.
Alan, so this gets released intraday yesterday. The stock pops, and then it drops fairly significantly there. Now it's popping here again this morning. What's your thought process here when you see this thing whipsawing? Like, obviously, this just looks like it's good news all around, and they initially bought it up, but then they sold it off. What's your thought process for the stock market action off this?
Yeah, so look, these things are really hard to predict, and I don't have a lot of experience in trading around FDA approvals, but I had been telling my subscribers at 420 Investor, for whatever it's worth, I said it will go to 158 upon legalization. 158 was a market cap based number, not anything beyond that. And obviously it ran up a little bit more before, which is good because, you know, people were able to check out early if they wanted to. And I actually reduced in almost all the exposure that I have, because what happens after these events is you know, Dennis, is, you know, kind of a sell the news type of thing.
Right.
Sometimes, not all the time. In this case, it was extremely likely it was going to be approved based on the advisory committee. And so it basically had a nice run up into the to the date, first of all. And second of all, a lot of times these things sell off because people fear there's going to be an equity offering right afterwards. In this case, I don't think that is the case.
Good call.
And so I think people sometimes will sell just because they're afraid of the equity offering ahead. But GW has, you know, I think 300 million, maybe a little bit more. It's a lot of cash. Now, do be careful, assuming they won't raise cash in the near future, because they will, I think, but they don't need to. So they don't have to do it tomorrow or the next day. I think they should raise more capital. Look what's going on in Canada. My gosh, the capital that's being raised up there. And GW Pharma has, you know, people always say, what's the next GW Pharma? I'm like, my gosh, there is no next GW Pharma yet. And if I were GW Pharma, I would build that moat even bigger by raising more capital. And it'll happen, but not in the next few days, I don't think.
It's a great point. Buy on rumor, sell on news. And that's kind of what we saw happen with GWPH yesterday. Chat wants.
I don't know why it's up this morning. I saw.
Yeah.
Up. I didn't see the news.
Maybe people Johnny come latelys to the headlines like, Epidiolex got approved. We better buy it this morning. Maybe this is another chance to sell.
Well, and so, you know, I've been following this, and so maybe sometimes people who follow things closely get blinded to the way others look at things. I try to be careful about that, but I actually was in New York recently and had a dinner with a bunch of subscribers, and they were telling me they thought I was being too conservative because they felt as though many people haven't heard about this yet. I don't see it that way, but
that's a great point. That's a tremendous point.
A lot of people may not be aware, and they see the headline and they're like, "Wow, who knew?" And so, I don't know. I sometimes, like I said, since I follow these things so closely, I can't even imagine people don't know, but I guess they can.
You see a headline, the first cannabis-based drug to get FDA approval. That's destined for like mainstream, you know, consumption right there.
Right.
So.
Right.
Yeah.
I wanted to just briefly say kind of one of the other things we need to watch out for, the uptake here. So first of all, I think a lot of people were confused yesterday about why this 90 days. This is something I had been talking about for a long time. It's not like I'm the only one that knew it. Everybody knew it that follows it closely. But the DEA can take up to 90 days. They took a much longer time because there was an issue with a synthetic drug by Insys. But in this case, it'll be 90 days or less, I think. There should be no issue. But that's just the way it works. And then at that point, and so GW's been very clear about this, that even if the approval had come a little bit early, they weren't going to, they were adding in their 90 days, and they weren't going to go any earlier than September anyway. So there's been no change at all in terms of when GW is ready to go. And I think there's also some concerns. There should be some concerns. There are about reimbursement. And I think the company's been working hard on it, but nobody knows exactly, you know, where they stand in that process right now. And that could be an issue. We've seen that crush some other stocks when the reimbursement's just not there. I don't think that'll be the case here. The cost is not like hundreds of thousands of dollars a year. They've never officially said the cost, but it's, you know, I believe what I've read is it's in the 30s. And so these patients are really suffering, and there can be hospitalizations and stuff. So to be able to reduce the seizures is seen by the insurance companies as a big benefit. Now, they've been talking a lot about the patient universe being highly dependent on Medicaid. And so it'll be interesting to see what the Medicaid reimbursement is.
We're on the line with Alan Brochstein, the author of the 420 Investor Letter. Question here about Canopy Growth here. Whew. Went up, got over 36 here. Looks like we put a double top in there, a new all-time high. And sellers came in the last few days. Any comments on Canopy Growth?
Well, I think I'll just echo what I said about GW Pharma. The way traders approach things, kind of buy the rumor, sell the news. Canada just legalized. Canopy Growth is definitely the best position for legalization. And I think it's been the vehicle of choice for traders. And so the whole market, it's not just Canopy Growth, had a big lift going into the final decision about legalization. And I think there was a little bit of a disappointment. Again, I don't think it's a big deal, but it had been expected that legalization would kick off around Labor Day, and they've now given an official date that's roughly, 50 days later, roughly 45 days later of October 17th. So the other thing is, if you're wondering why canopy growth may have gone down, they did a very large convertible note deal. I don't think this one is as typical as some of the others in terms of the pressure it can put on the stock when people sell the stock just to keep the the option of the convertible note, but that may have had a little bit of a role as well.
Last question, Alan. What about maybe cannabinoid peers like Zynerba or any other peers? And do you have any insight or update on what's going on there?
Yeah. So, well, first of all, I don't really follow those stocks so much. They're not really working on cannabis-derived drugs, but rather synthetic. So I kind of draw a line. They're just true biotech stocks, kind of playing to one of the components that they synthesize. And so I don't pay as much attention to. I pay a little bit though, and I don't think that you can read much into this. Just look at GW itself. They obviously just had success with Epidiolex. They've struggled with Sativex. It was approved in many other foreign markets. They couldn't get it approved in the United States. They recently had a setback on, I think it was CBDV first. I forget exactly what it was. It wasn't a big setback, but I think it's very important for investors to understand just because one drug trial works, like Epidiolex, it doesn't mean that every cannabis or cannabinoid type of deal is going to work. So I wouldn't look to this as a big read through. And I think, I saw yesterday Zynerba fell. A lot of people were, probably trading it because they thought it would be, move up in sympathy. And I get it. Traders do that and it happens, but the reality isn't there, in my opinion.
No fundamental change based on that. All right, Alan Brochstein. Yep. All right, Alan Brochstein, 420 Investor is his site, his service. Alan, thanks so much for the insights. As always, have a good day.
All right.
That was great stuff there. That guy knows it. That guy knows the space.
There's nobody better than Alan in the pot space. Nobody. He's got her figured out.
We get some comments in the chat here that Constellation Brands got into that CGC a while ago, and it's been up nicely. So it's a sector, it's a growing sector, and lucky we have Alan Brochstein to follow it with us. S&P futures are climbing back, folks. We're only down a half a point here at 27, 21, 75. Dennis, kind of want to get your thoughts. We never did any general market talk. Do you want to save that for when Nick comes on in 6 minutes?
I'll start it up, and then Nick will probably continue it. But, yesterday you see a significant sell-off, but it's not out of the blue. I mean, we've been talking about the worm turning and and obviously, selling the rips here for the last week. You could see, where we broke there even last week with Amazon. I was saying I'd be selling the pops, and on Friday gave you an excellent pop and an excellent selling opportunity. We opened right at the highs on a lot of these tech stocks, sold off. You could really kind of see it turning, and that's what we've been talking about. It's all about reading flow and understanding. If you're putting screen time in, you can kind of feel it, and you could feel the market turning there. So. It's not surprising to me anyways, this market sold off significantly yesterday. The question is now, you got to reevaluate because we have had a significant sell-off here now. Do you use the market continue to go down, or do you use this opportunity to maybe buy some of these stocks that you couldn't get a week ago on the pullback here? And, that's, a question still to be answered here by the overall market. But I'll just say you saw a lot of rotation yesterday. You saw tech very weak. You saw consumer staples very strong. Stock like Walmart, in a terrible tape, was up significantly yesterday. They were buying food stocks. I mean, besides Kroger, which was downgraded, they were, obviously buying stocks. We had Campbell's news there, which was really propelling stocks up there. And, that's what's continued here, at least throughout the day. Now, this morning, we're getting a little bit of a tech bounce. I think you're going to see sellers into that bounce again because, here we are. We got really weak there yesterday. I think you do see some follow through here, at least, off in the first hour. So I'm actually a fader of a lot of the rallies in some of these techs here this morning.
Great segue here, Dennis. You mentioned flow there. And from the chat, Dennis, how do you quantify the flow? And we got a great example. Spencer, give us the news on addition and deletion in the S&P 500.
Yeah, Dr. Pepper Snapple is out, and let me get who is the
CPRT is
Copart. Yep, Copart. CPRT is in Copart, and Dr. Pepper Snapple DPS is out of the S&P 500.
Okay, so I was trading this last night on the news, and CPRT is added. Typically, your ads will go up, your deletes will go down on that announcement because being added to the S&P, it's obviously thought that there's going to be indexers that are going to have to buy this stock. So I bought it on the news, and it started going up. But then there was just sellers, and there's people, the ARBs, that are statistical arbitrage traders that are buying it because typically they do go up. But then there's more sellers, and I'm like, you know what? I'm like, this wants to go down. The flow, the order flow, because the sellers are coming in. It's good news. It's good news usually for the company, good fundamental news to be going into the index. But there's sellers coming in here. I'm like, they're going to sell this. I'm like, this wants to go down. So I turned around and sold my long because the flow was telling me that it did not want to go up. I actually made 25 cents on the trade. I think I bought it around 58.60 and sold like 58.80 or 58.90. So I made a little bit of money on it. But the flow was telling me, get the hell out while the getting's good because this wants to go down. And the flow was telling me to go short. I thought about it. And I'm like, I cannot bring myself to short a stock that is going into the S&P 500. I just couldn't bring myself to do it. So even though the flow was telling me, short this is going down, I couldn't bring myself to do it. It would have been the right call. Just by reading the flow and reading that the sellers kept coming in here off of good news for the stock, which is going into being added to the S&P 500, you could read that's going down. Look at it here this morning. It's trading down. So everybody who was buying that last night, thinking that it's automatic, that something gets added to the S&P 500 goes up, was incorrect. So, and that's where we are here now. This morning, the stock's trading down, and a lot of those people are caught long. So, ugly candle yesterday was getting faded immediately. I mean, that's where technicals come in too. So there's people who are obviously long this thing that don't want to, are using any pop to get out. And now there's arbitrage people who are, stat arb guys who were probably playing it long last night who are caught in this as well. So I wouldn't be surprised if things show some more weakness, even though it's getting added, even though fundamentally speaking, it should probably go up just because it's being added. From a technical perspective and from a flow perspective, it wants to go down. So I don't fight the flow. Joel, crickets.
No, that was a great conversation. I don't know if Joel's on mute or what. I don't know what's happening.
No,
okay.
No, I wasn't on mute. I was gonna say you're trading at yesterday's low. That was 57.79. You're trading at 57.75, folks, but you are not really getting that bounce.
57.69. There's people caught in this long right now.
Okay.
There are people who bought this last night. A lot of people that are saying, this is out of the S&P 500. This has to go up. The market doesn't have to do anything. Even if, you've got a slam dunk, this always works. It doesn't have to always do it. And in this case, those people are all like, well, it's got to come back. It's getting out of the S&P 500. It's got to come back. Those stubborn people could lose some money here today. So that's why it's offered 57.69. I think it goes lower. And you'd be like, you're saying, just fundamentally think about it. I sound like I'm nuts. I sound like I'm nuts. A stock that's getting added to the S&P 500 is going to go lower, but that's what's happening. That's what the market's telling you. That's what the sellers after hours are telling you. So it's the sellers in the pre-market are telling you. Maybe they eventually exhaust. Maybe it's one person that's just pulling it down. Maybe it's just one person that wants the hell out. Maybe eventually gets relief and does pop. But as of right now, this wants to go lower.
Yeah, and you do have, I see we are trading below yesterday's low or at yesterday's low. Just keep an eye, though, folks, on 57.30 if you're looking for a level under this to see what should hold. June 11th, you had a low at 729. Yeah, yep. You got a bunch of lows at the 57.30 area, but Spencer pulls up a monthly chart for you. You can see this stock has had one hell of a run. So if someone's at 2018, the stock ended 2017 at 43.19. We hit over $60 yesterday. So could be a lot of people who want to take profits in this one as well. And I'm not going to ask you guys what it does because I'm going to look it up here. And
what is it?
What are we looking?
Oh, you're still talking CPRT.
Yeah, but we got Nick on the line. Nick, how you doing?
Let's move on from CPRT.
Doing good. How about you?
We're doing well here. S&Ps are trading flat this morning. buyers and sellers are squaring off here, Nick. Has this the price action from yesterday shaken your bullish thesis on the market?
Not the long-term bullish thesis, because the headline was ambiguous. He said investments, which really is scary because that was part of his Trump trade, right? Because he was inviting money to come and invest here. And this seems contradictory to that, but we're not sure. We've heard from several people in the administration, and nothing makes sense so far. So yes, it's a looming threat, but not one that would change the game for, say, the P&Ls of many of the large companies.
Okay, all right. I mean, but what about the whole thing? I mean, just from like a fundamental standpoint, you have, the president putting out, a tweet like that in the middle of the night, and then all of a sudden during, fast or whatever the last segment of the show today, Peter Navarro comes on and says, "Oh, he didn't really mean that."
That's my point.
How's that a stable investment environment, Nick? How's that a stable investment environment?
Because what they're debating is not going to affect the bottom line of large companies. How is that going to affect Google earnings? The foreign investments in the U.S. I don't think it'll affect Google's earnings. I don't think it'll affect Apple's earnings. They invest their own money. They sell stuff that we buy. We, the consumer, we click. It doesn't require an investment company to come invest here. It does affect the hoopla over, hey, let's buy the Trump trade as a unit. Like the stock market exploded after the tax laws, for example, and but it doesn't affect the actual fundamentals of a lot of the large companies. That's my opinion. Okay. So it's an ambiguous headline from that perspective, yet it is a looming threat. I give you that for the trade itself. So I think it was overdone for one day, given that we don't know what the heck it was, and we shall see what happens. So you and I have had a debate as to, will we get new all-time high in the SPY, or will we retest the lows? And I'm talking the lows, because that's the same period of time. I would vote for the all-time highs versus the lows without a new shoe to drop.
Nick, let's move this on to the tech stocks, because we had a tech wreck here yesterday. A lot of issues really getting slammed. I mean, I think it's just a matter of these things were going straight up for so long. They needed to have a little bit of a pullback here. That's what we got. I mean, Netflix, if you really put it in perspective, yes, it was a horrible day for it when it's down 25 points, but the thing's up 100 points in the last month.
Yeah.
So, I mean, really, when you put that in the long-term perspective, it doesn't even look that bad on the charts. Yes, it looks like a nice down candle, but at the same time, I mean, this has really gained a lot. It's getting back a fraction of those gains, but it's not as bad as everybody would have let on yesterday.
No, absolutely not. I mean, Netflix is a momentum stock, right? And we know how momos go. They rarely give us a perfect entry point or an exit point, and that's what makes them so difficult to trade. So on the way up, they look like they're going to correct at any point in time, and on the way down, they look like they're headed into an abyss. So it is hard to trade it from that sense. And I just shared a Fang gang chart just to show that even with yesterday's drubbing for Netflix, that works too. They're back to breakout points, recent breakout points. So that's how breakouts unfold. You bump against a ceiling, then you break through the ceiling, and then you come back to the ceiling to see if it's solid support so you can build on that. So we shall see if this is solid enough support to continue the uptrend. But even if it has some more downtrend, there's still other breakout zones below it because of how fast we got here.
Now, this is an ugly candle. Does this spook, those Momo traders, now that if the thing goes into rally mode, there's going to be overhead supply here because there are some people caught long? What are your thoughts here? Not just Netflix. I mean, this is not just a Netflix issue. Square looks similar. SQ stock has been straight up for basically a month and a half. Now we get two, hard down days at it. Amazon, the same story, similar. It's run straight up since April. We're under 1,400. Basically straight out. We had some blips in there, but for the most part, we've been pretty much straight up for 300 points. Now we lose a quick 100 points, caught some longs. Does this,
So wait.
Make it more difficult to rally?
I don't think so, because these are all PEs over 100 that you mentioned. So that's what they do. They overshoot up, overshoot down. They overreact up, overreact down. So I'll give you another example. Yesterday's drop in Intel, for example, 3.5%, brings it down to like a 14 PE, trailing PE. Is that a scary PE for a company like Intel? No. So if I owned Intel stock, I'm not panicking out of it. But if I paid up $1,760 for Amazon and it drops 60 points, I may be scared out of it. So, but those who invest in Amazon may have the fortitude for that. So these are not the same. They don't represent the market. They have been leaders. So all the bulls need here is leaders to emerge. There's one giant leader that's been in the stinker for some reason, is Apple. So I've been saying, is Apple warning of something? Why is Apple underperforming like this? Why is it been like not in the headlines? Why is it ramping into wanting to ramp into earnings? I'm watching Apple. The market needs leaders that are not so frothy. Like recently, the momentum trades, like you mentioned, Amazon and company and Netflix, those are great when they run, but we need other legitimate companies to follow. And like maybe the banks this week will surprise everybody.
There we go. I was just going to go into that, Nick. The banks, they made some new lows to the move yesterday. I mean, the conventional wisdom is, hey, the stress tests are going to be great. They're going to increase buybacks and dividends and everything. But the charts, and as Dennis would say, the flow is going the opposite way here. It's just and the other thing too, when I'm talking about the overall market with one concern we've had has been the financials. These financials need to get up off the mat to get back to your prediction of all-time highs. I see that's the only thing that's really holding us down. Tell us about how you're playing the XLF. Okay, so the XLF, I'm long several banks, but I'm long via sold puts, so they're still profitable, but I'm also long via some recent calls, and those are red. So it was a binary trade for me. So it'll either happen or it won't. So here, technically, like you said, that's pretty awful. They're bumping along a neckline, but that was the neckline from which they broke out back in December. So will it serve as footing for the next leg higher, or will it be a head and shoulder-ish pattern that brings it back to 26 or lower as far as the XLF is concerned? And I bet you every bank I pull up, it'll look the same. So, but there is value there because they're selling at or below book value. And if I'm sold puts, I'm not panicking out of them. They can give me the stock, I'll take it. So the idea here is, why are they underperforming? And like you said, everybody's expecting them to pass. They passed last week, but apparently this week they tell us individually how well they did, so they can individually tell us if they're going to do buybacks or not.
Yeah.
So how big of a financial engineering they deliver or they don't is the trade on the bank this week. Maybe they surprise everybody. Everybody expects them to say, okay, we're going to buy back umpteen and give dividends. So maybe they'll disappoint, or maybe the disappointment is already priced in. I'm not sure. It's a binary outcome for the banks, but that would be one sector that could lead.
This market's been kind of funny because in some instances it's been somewhat predictable. And I think, as you get people more, the market's more spooked, sometimes becomes more predictable. The banks have been selling off here quite substantially here. And then I think we're going to get Thursday, we're going to get some more of the stress test results. And then, potentially after that, we'd get, buybacks or dividend information.
Wednesday, I think.
Some of these individual. Is it Wednesday?
I think it's Wednesday.
Okay. So in the next couple of days, Wednesday or Thursday. So it's coming. It's a catalyst. So you just wonder, if there isn't going to be, and it all depends on the market. I mean, the market pukes another 500 points. They're going down. So, so there's nothing you can do about that. But, other things being equal, if the market holds up, I almost think the banks could bounce into, at least, Wednesday, Thursday into this information. And then, it matters, obviously, what they say and if they're doing significant enough buybacks and dividends to prop it up. But it's almost seems like a little bit of a predictable bounce here, but maybe it's not going to happen.
Every time I've heard an expert on TV or read an article about banks, they're all expected this week. So maybe that's why I said maybe the disappointments in the bank is already priced in. But then again, there have been some trades that have been baffling me these days, which is gold, for example, falling and falling and falling.
Well, let's talk about that.
Yeah, I'm not sure what's going on there. So
we don't need gold anymore.
No, apparently not.
We don't need digital gold, and we don't need real gold either.
Well,
apparently.
digital gold was a safe haven yesterday. That's the funny part of it.
That's what they were telling us, anyways, Nick.
Yeah. It bounced yesterday on a technical basis, in my opinion. So there are a few things I'm watching, and one of which is, everybody was talking about runaway rates. I would be shocked if rates would run away, because the bond market outside the US pays 0 or minus. So money has to flow into our bond market. And if that's the case, rates cannot go up. That's how it works, in my opinion. So the TLT is looking a little frisky here. So it wants to pop, but it's running against this meme of actual rate tightening cycle in the US. So it wants to go down, but it wants to go up, and it's afraid to do so. But I'm long some calls there as a lottery ticket, just in case it blows up, because it might cause a move in the market. I'm not sure. So I'm just covering my angles there. So I am optimistic, but I'm not reckless. And if you read my notes throughout the week, I'm saying I put out how to defend the portfolio last week, a video. So, I'm not blindly long. I did take overnight protection into yesterday, and yesterday re-upped it. So I am long, but cautiously so, because I can't trust the headlines.
All right, Nick, I got a tough one for you here. FactSet, Research Systems reported. Now, I'm seeing just a little volume in it. I mean, it is trading lower. I'm not sure what the report is. We can pull that up in a second, though. It's trading down 587. You got a print there at 202. FDS, any thoughts on that?
It's not pulling up here, so give me a second.
Frank David Sam. FactSet.
There we go. Okay, I get it. Whoa, okay, it's one of those that's high flyer. So you love these, right? Double top. What's it trading now?
202.
202. So it's still headed lower. So FactSet, in my opinion, the breakout point was somewhere. Not the breakout point. The pivot zone, in my opinion, is somewhere between 200 and 204. Is some sort of an eyeball plus or minus area.
Gotcha.
That they.
Yep.
So they're probably retesting it. So often enough, like you and I say, they overshoot on the way up and overshoot on the way down, and somewhere in the middle lies the truth. And in this case, somewhere in the middle, one thing I pay attention to is the earnings in December. There was huge volume on that big dip. So if you want to consider that was an overreaction lower, so somewhere around 193 was probably the worst case scenario where they should have taken it. So this just gives you as a worst case scenario short term, and where they could overshoot to. My best guess is they probably won't fall too far below 200, maybe 196.
That FactSet report, the EPS was higher, the sales was mostly in line, and then the guidance was in line. So mostly an in-line report for.
So yeah, but these days everybody wants wow factor, right? Raise guidance. Sure. This one is a 30 PE, I think, which is not cheap, but I don't know what they do. Are they growth or whatever? So it depends on what they are. If they're a growth company, 30 is not that bad, but if they're a regular company that's been like this for a while, then 30 is pretty expensive when you compare it to, say, Apple, which is like 18.
I agree with you there, Nick. I think they slaughter this thing today. I think we're going to see this in the lower 190s. Just my opinion, no position on it, but just the trading action from the pre-market tells me it's few people who bought this on the report that are going to be like, uh-oh, I went the wrong way, because quite a bit of stock trade at 209. You had about 4,000 shares trade up there.
The good thing about it is that it has recently shed about 4%. So that takes away from the sting that would have been. So yeah, I agree with you that I wouldn't want to catch it with bare hands. So
no bids. 192 is the best bid in the pre-market. I think it's going to print in the lower 190s. So just be cautious here if you're buying at 202 right now. I think there's a lot of air below, and for those reasons that Nick cited, higher PE stuff is not really in favor. At least rate, might be tomorrow. But as of yesterday, they were selling all this kind of stuff ahead of the numbers, and now the growth maybe not there. That's concerning there for FDS shareholders.
Look what they did to Oracle. So they when they hate something, they're going to hate on it for a while. Yesterday, Micron fell out of bed pretty hard. Is it up today? I bet you it's
got
probably
upgraded. because it got upgraded.
Okay.
So yeah, an analyst came in.
How silly are people still following these so-called experts on Micron?
You should have been listening. We just did a whole 10-minute right off the hop. We got an analyst question, and we were talking about. It seems like, you know, the majority, like I was throwing it out there. I think it should be like a PhD thesis for somebody to back out all the ratings out of like stock moves and see what the moves really look like, because these ratings, they move price, man, even though it's just an opinion.
It's just, it's not only that, it's proven often. I mean, rarely do you see somebody come out ahead of earnings and take a stance.
Oh, they're scared to.
Yeah, they wait until after the fact, especially in this stock here. I mean, they were proven wrong so many times, like that one down to 35. You know, we've discussed it several times. No need to rehash it, especially that you already discussed it today. So yeah, I'm on board with that idea. So yeah, I have a friend who is actually, she might be here in the room. So anyway, if Micron is bouncing, I'm not that surprised. I sold puts in Micron, but they're down at the 40 level, so they're still green. I trimmed them, but I'm going to leave them to die.
Where do you think Micron? So, and I'm planning on buying some more Micron here eventually too. So you think, like, what are you getting on those 40s when you're letting those go now? 40, 45, like what kind of?
I collected like $1.50 for them. I think they might be 70 cents now, but they were down to 35 cents not too long ago. So I trimmed, but yeah, the yesterday's 7% dip obviously reheats them. So I haven't checked today, but if I remember correctly, 70 cents was the last amount I looked at it. But nevertheless, it's a sleeper trade, and worst case scenario there, because I am naked those puts, I might be actually they're 90 cents. And I collected $1.99, my blended price for them. So never mind that. 90 cents is worth a shot. I mean, these are October puts.
Hey, Nick, one quick question here, just for going back to the overall market. Like, what's your, like, to me, it's like a really important day. And usually, like, I'm super opinionated. I think the market's going up or down. Today is like, to me, it's like a really important day. And when I was doing the levels last night, I was thinking, man, you know, they're going to dance around a lot around the close here of 27, 22.50. You know, did we miss a big buying opportunity yesterday and we're going to ratchet right back up? If you had to give me like one number, I know you like to look at things at the end of the day. You know, what are you looking for your key to today's session? It's just going to say, all right, we had our one-day sell-off back up to 2,800.
Well, here's what you know, just looking at the volume and the price action, it tells me that yesterday was an overshoot way outside of the value area from a price profile perspective. So this is where if I was short, I'd be exiting. And if I swing trade, I'd probably be loading some calls to play the bounce. But this is under normal circumstances. But we have seen lower numbers, and I told you yesterday that my eyeball is attracted to 26.87, 88. That would be the first stop if we lose yesterday's low. So just look at yesterday's low as a moment, and then I would know that I have a level below it at 27.87, and then 27.55 is the natural stop below that. 87 and 26.55. But all of this doesn't change the natural price action. We just had a trigger that brought it down so quickly, but that's also fine because we ran up so quickly. So here's the thing. You just mentioned, what if we didn't have analysts? Okay, so what if we didn't have news and you just had P&Ls to trade? Would you exit yesterday at 7% down in Netflix? You know, nothing changed in its fundamentals. Zero. We won't have fewer people buying, opening memberships in Netflix just because Trump decided to put restrictions on investment in the U.S. So if you didn't know that headline, you wouldn't be panicking out of stocks.
That's a good point. He's right. All right, Nick Chahine, author of Create Income with Option Spreads on the MarketFi platform. Nick, as always, thanks for the time, and have a good day.
See you next week.
All right.
All right, we didn't even do Lennar earnings, and we got it. Yeah, whoo, what a move! This thing is moving. Spencer, what do you got for us in Lennar?
Yeah, LEN reporting this morning, Q2 EPS $1.58. I know that does not compare to the 45-cent estimate. No way. There must have been some tax thing there. Sales 5.45 versus 5.1. billion. So the sales figure you can compare, that is higher than the estimate.
Alien, show us that pre-market chart there, Spencer, and we can talk about the pre-market action. Joel, break it down here, what it's done.
Well, the first thing when I see this thing is, wow, street leaning the wrong way into this one, at least into the report. Sold off yesterday and made a new low of the move at, what was our low of the move? 48.71, closed just about that level. Then you're getting all that back and more. And you get up to what, 53.90 in the pre-market. You've leaked already almost $2 off that. I don't know. To me, Dennis, overhead supply. I'm not touching this one on the long side off the open. And
we've already seen the story play out.
Yeah.
This exactly happened back in April. They kicked butt on the earnings report. The thing popped like $6 or $7, and a week later gave it all back. I mean, here you have a similar trend. You know, it's coming up. 55 is hard resistance, 54, 55. And you're already starting to leak. Now, I don't know if it's going to do the same thing, give it all back in a week, but I'm definitely not chasing it because I've already, watched, everybody who bought this thing get burned before. So I'm not going to be the person who gets burned on it this time chasing it up. Was the report good? Yeah, numbers are good. Yeah, in a normal environment, maybe the thing goes up. But you've got, a little bit of a sell the rip mentality here right now. Here you've got a juicy rip to sell. They're already selling it in the pre-market. So I'd say caution of the buyer.
All right. S&Ps are trying to get up off the ground here, up $1.75 at 27.24. Our pre-market high, 28.50. Real quick, RCA's popped in the chat today and wants to know what I think of Federal Express. And has it stopped going down yet?
No. Today, maybe. For an hour.
Well, let's see.
What a move. What a move. There's your classic Dow stock. Just, this is definitely putting some weight on the Dow. 265, week and a half ago, 235. Lost $30 here just in a short period of time. I mean, there's going to be overhead supply all over the place in this thing, too. You see these charts, Joel? Like, doesn't this make you a little bit nervous when you see stuff like this going on? Because this is not going to come right back. This isn't going to be just back all of a sudden at 250 and it's like nothing happened. I mean, this burns some people hard here. There's some people caught. There's no out. I mean, if you were trying to cut the loss and say, okay, well, after you bought it, let's just say hypothetically, and this is what I try to do is put my mind, into the investor, into that market's head here. And if you were a guy buying 263, 264, I think the trend's going to continue. I think FedEx is going to be eventually $300. Okay, comes around to June 19th. It goes from 261 to 254, falls 7 points fast. It was like, okay, well, you have so many investors saying, wow, it's going to come back. It's FedEx. Next day it goes down to 250, from 257 down to 251. Oh, it's got to come back. That's way too big of a move. You got some support at 250. Next day it goes 251 to 245. Next day it goes 248 to 241. Then yesterday it goes down to 231. Now you're like, what happened? Deer caught in the headlights. So as this thing comes back up, you are going to be looking to cut those losses. So there is overhead supply all over the place on this thing now. That's why, yes, can it bounce back 5 points? Sure. But to get up to 245, 250, 255 again, you're going to have to go through a wall of sellers up there that got burned on the way out. People who bought this thing back in May at 250 and all of a sudden saw their 15-point gain turn into a 15-point loss. There's a lot of overhead supply. And this is just not only one stock. There's a lot of stocks that look like this. Market's a little bit broken right now. Sometimes it takes some time to fix it. Not saying the bull market is over. Not saying the long-term thesis is gone. Just saying I don't think these markets bounce right back.
This one is a tough call. You do have it up trading in the pre-market here at $1.37 at 235.90. I mean, yesterday's high, I'd be very impressed if you even saw yesterday's high at 240.33. And I think I'd be a little surprised if you saw yesterday's low at 231.98. Would I be looking at, let's say I wanted to lead on that 31.98, I would see if this stock I could get unchanged on this session at 34.53. If you can't get it unchanged, then, some buyers may think they have missed the boat and they might push it up through 240. So I'd like to see at least another low in that area, but holy mackerel, I just think it's still too early to figure a 50% retracement off that high. But
let's stop going down before you're buying it. Let's stop going down first.
All right, Des, quick look at imbalances here. We're coming up on the top of the hour.
Sure, let's do it. Square 112,000 to buy, which is interesting because Square is actually downgraded today. Who downgraded Square? Spencer?
Oh, top of my head, I don't remember. I have to look. Let's look real quick.
Go look it up
real
in
fast.
the background here. So 109.
Stevens.
Okay, that's small.
To equal
So
weight.
you're talking third tier. That is third tier. So they're not going to have that much influence. It is a downgrade. It's a reason why a lot of these techs are trading significantly higher. It is not participating because it is downgraded here. There is 109,000 shares to buy. Caution is downgraded today, but again, there's a lot of factors here. Stock was $69 3 days ago. Can they have some bounces? Sure. I think you get anywhere near 65. I think there'll be a load of sellers though. So keep that in mind as these things sell or as these things rally here, they get up enough. There's going to be a lot of sellers, and I think it would be a better shorting opportunity up at 64, 65 than a long. I don't know if I see it there going there today though because of the downgrade.
Did we touch on imbalances at all? I know we're running.
Well, that's what we're doing
that's,
right
that's
now.
what he's trying to do.
109,000 to buy. GE 191,000 to buy. It is now up at 1360. We know the news. We covered it off the hop. Yep. It's still to be determined whether that rally is going to hold. So far, so good because it is holding in the pre-market there. Alibaba, which has been annihilated here for the last few days, really got a bad day yesterday, get down all the way to 187, is trying to bounce here a little bit. It's got 16,000 to buy here this morning. Twitter got hit hard yesterday too. It's 20,000 to sell on Twitter. That can change. That's a small number, so that can change in a heartbeat here as well. Looking at some of the other stocks that are moving, the imbalances are really small. And you want to know why? Because if you're thinking, again, put yourself in the institutional trader's heads, because this is really what imbalances are. It's really giving you a taste of institutional action ahead of the open. So if you're an institutional trader and you've got some uncertainty here, you're holding your cards pretty close, and you don't want to show your hand here too early. So you're going to see these things, really, change here in minutes before the open. As if you're a big institution, you're looking to sell some stock, you don't want to show that right now because you don't want to spook it down. So you're probably just going to hold on to that order as long as you can. If you're an institutional trader on the floor, they know to hold on to those orders. So, that's why we're probably seeing very small imbalances here this morning because first, it's not an obvious day here. We're getting a little bounce back, but these bounce back days are sometimes, a little bit scary too because it gives an opportunity for a lot of people who got burned yesterday to start selling again, and that can actually start the selling. Sometimes the best thing for the market is to just boom and then get another big down move the next day and wash everybody out. You're not seeing that here now. You're seeing more people kind of, buying it. Oh, I think that was the dip to buy. Almost a little bit of a suckers rally here this morning. So I think I'd actually be fading this rally here in the overall market.
All right, Spence, wrap things up here and preview Wednesday show.
We got a pair of guests on tomorrow's show. Tim Melvin will join us, banking on profit. He is our small banks guru. And then Peter Brandt will join the show. He is the CEO of a prop trading firm, Factor LLC. He will join the show at 8:35. But that's going to be it for us today. If you guys want to catch the podcast, you can do so on iTunes, SoundCloud, Stitcher, TuneIn, and Google Play, or just rewatch the show on Benzinga's YouTube channel. Thanks to our guests today, Alan Brochstein and Nick Chahine. Thanks to all of you in our chats on YouTube and premarket.benzinga.com. Hope you all have had a good morning. Have a good rest of your day. We'll see you guys on Wednesday.